Welcome to the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Columbus Day, Indigenous Peoples Day, October 9th, 2023 edition. Briefly, we're just going to talk about the job numbers as well as consumer confidence and Americans dipping as the inflation continues to rise in this economy. We know that the numbers are starting to look a little bit bleak. But the good news is that the economy is still humming along in the lieu of a shutdown, another potential shutdown November 17th. So that's the good news. We have more and more time to prepare ourselves mentally, spiritually, physically, and emotionally as things continue to deteriorate here. Now, we're going to be talking about first the job creation here numbers here, according to CNBC.com. Quote, even as job creation surges, Americans still think the economy stinks. Here's why. Well, the problem is that what type of jobs? Once again, we've been talking about this, ladies and gentlemen. The leisure and hospitality was 70,000 jobs created, and government was 90,000 jobs created, those two areas. So you look at that and you have to ask yourself, well, leisure and hospitality, how much are they really paying, nominally? You're talking about, even though they raised California, so they raised the fast food wages to $20 an hour, $20 an hour. You're looking at jobs, part-time jobs, or people getting second jobs, and that's adding into the total of this jobs, you know what I mean? And so when you have people getting second and third jobs, yeah, of course the numbers are good because that's adding into the totals that are already there. So now we have that, and then we have the type of jobs being created in leisure, hospitality, transportation, and government. These are not jobs that are going to be leading innovation like technology or leading, disrupting, creating opportunities for manufacturing and production in the tech and IT and AI and all these other sectors that the other countries are doing. And this is why we are having a problem. And secondly, inflation. Listen, we have jobs, but the jobs are not keeping up with the rate of inflation. Inflation, as you know, is at 5%. Real inflation, according to shadowstats.com, is above 10%, as we know. Even though it has slowed down, that's the good news, it's still high. And it's been high since throughout the whole beginning of this year and last year, and it will continue to be high and going into next year. And that's why the Federal Reserve Bank is going to have to raise interest rates again in November, because they're seeing this. They're saying, hey, wait a minute, the jobs are growing. We grew by 2.5. We added 2.3 million jobs this year. Everything is looking honky-dory. The unemployment rate is below 4%. We have to add more. We have to raise these rates even further. But many people are going to be struggling because right now we have a situation where consumer confidence is going down. It's down to 69.5%. That's from a high back before the pandemic of 99.8. And then the pandemic dropped it to 71.8. And then after that, a couple years after, 3 years after the pandemic here we are at 69.5%. People are not confident, even though they have, they may have savings, they may have, retirement, credit cards, all kind of stuff. Most Americans are not that confident in this economy because they see prices still elevated in food, transportation, utilities. And this is worldwide. It's not just an American problem. This is a European problem. This is an Asian problem, Australian, African, you name it, Latin America. Prices are high everywhere, and it's getting more difficult to meet ends meet. So we have higher housing costs. As you know, the mortgage has gone up. Rates have gone above 8% now, 30-year mortgage, and that's if you have good credit. That's if you have credit above a 750 FICO, or all of that stuff. A great down payment, 10 to 20% down payment, 5% down payment for some. But you look at it and you say to yourself, this is not sustainable. Now. And also, the average age of the home buyer is now, quote, 36 years old. This is going back to 1981. We have people living together. You look out in some of these subdivisions, you see 4 and 5 cars in the driveway, multi-generational families living together, from grandparents to the kids, helping raise the millennials kids, and because people have to work 2 jobs to hustle on the weekends or whatever. So that is a lot of strain and stress on the American economy. Remember, we're not producing things. American economy manufacturing has gone down to less than 25% of producing from what it was back in the days, back in the 60s and 70s and 80s, where we actually were producing more than just fast food shops and car washes and that. Now we're in a situation where things are going to be going very slowly. So just like Rome wasn't built in a day, this economy is not going to crash in one day. Contrary to many YouTubers out there who believe it's going to just all coming down in one day. It's a slow unwinding of the economy, because it's a $16 trillion economy, so it's going to take time to unwind. But it's unwinding, as you can see. U.S. consumer credit posts biggest drop since pandemic as student loan payments resume. This according to MarketWatch.com. ladies and gentlemen, this is just another bill. We have over 45 million student loan payments, people making payments on these student loans. This is going to resume this month. It's already resumed. They've sent out the bills this week, and next week the bills will be coming due. Now, the good news is that, President Biden says, hey, you can get on the SAVE program, you can get on the income and payment program to help reduce your payments, and it has, thank God for that. The bad news is that the payments are going to be resuming, and it's going to be continuing to impact your pocketbook because, listen, most people get paid bi-weekly or monthly, and so they have to make these payments every 30 days. And 30 days comes fast, as you know. Every 30 or 28 days, it's like, hey, I'm making another payment, and I'm not seeing it go down because, remember, the interest rates are rising on student loan payments, too. Interest rates are rising on student loans, credit cards, auto loans, you name it. Government loans, student loans, interest rates are rising across the board. And see, this is what's going to hurt the U.S. economy. So now we're looking at this. That's why I tell people to continue to prepare. And not just that, you have to look at this from a spiritual point of view too, because also as money becomes more tighter, people have to make more decisions about whether or not they're going to continue to give to certain causes, to give to church, to give to communities, to certain causes in the community, or they're going to have to decide between what bills they're going to have to pay between light bill or a phone bill or actually an internet bill, or should they use that money to actually pay towards something else, and rather than spending on leisure and hospitality, or having a vacation or something like that for a one-time family vacation. So all those decisions are going to be critical to be made. And the Dow Jones went down on Friday. It rose a little bit on as the day before, but it's going back down now because they know, looking ahead, that these markets are pricing in another rate hike in these interest rates, and also everything is going to be tightening. So first we're going to get the credit tightening heading into the Christmas. We're going to get the credit and interest rates tightening, and then next year in 2024, that first quarter, we're going to see a real belt tightening when people realize that this, and not only inflation is here to stay, but they're going to realize that there's a liquidity problem, that we're not making enough wages, enough money to keep up with the demands of production costs and the demands of everything. You're going to see more strikes, possibly, not just in healthcare, not just in and retail, but you may see more strikes and more needed services like sanitation and wastewater workers and all kinds of things that could be happening. And that's why it's important that just like this Black Swan event we have in other countries going on in the Middle East and the Ukraine, we could face that right here in America, but to a lesser extent. And that's why it's important to be prepared, not only mentally, physically, and spiritually, but emotionally prepared to be strong, because there may be times where we may go through where we may not always have the things that we need. There may be a hacking event that may take out the internet or take out the power system for a day or two or a week, and people may say, oh my gosh, I can't get any ice, or I can't get this, just like we had during the pandemic where sometimes there was a shortage of toilet paper or a shortage of this item. So expect that to be coming, ladies and gentlemen, as we head more into this holiday season and into, especially in the beginning of next year. It could be anything that can come out of left field, whether it's something that was manufactured intentionally as we head into this election year next year, or something that was actually unplanned, so that's why we always can stress that on this channel, to prepare for these events as best you can. You're not going to be prepared for everything. No one is totally prepared for everything and anything, because it's just the nature of life and the nature of what we're facing. But we can do certain things to help mitigate some of these damages that are going to be upcoming with this economy, unfortunately. So God bless. I'll talk to you after Tuesday when we get more numbers in, not just the job numbers, but also more earnings numbers as we head deeper into this third quarter of this year. And God bless. Take care and be sure to subscribe. Bye bye.